businesses. So, gentlemen, thank you very much for joining today. I've known both these gentlemen for a very long time. Gonzalo, I think, for about 15 years, maybe even longer, and Frederick for a good, 10
plus
or more, I don't know, I've forgotten. Very long time. But perhaps you can introduce yourselves, Gonzalo, if you could introduce yourself.
Sure. Thank you, Simon, for having me here one more year. I'm Gonzalo Ortiz. I'm a chairman on Terium Invest, which is a venture capital firm in Madrid, in Spain. It's our third fund. We have been investing since 2008. So we started with our first fund of seed capital, which was inception capital. Then we have ONSA Capital, which is a growth strategy fund, and then Terium Invest, which is the third one. We like to be active in the industry. We really participate on whatever we do. We are not a profile of finance guys. We are background from entrepreneur. So me and my partners, probably known as the Mitula co-founders, and at the same time we've been investing and looking for business to participate. We like to help in management team and help them grow the company as fast and as high as they can.
Okay, excellent. So some incredibly good experience. And Frederick, how about your background and how you set up PropTech Farm, which is a couple of years old now, I think.
1.5 year old.
Yeah.
Yeah. So my name is Frederick Bergman. I've been coming to Simon's event since San Francisco, when you were doing it at the same time as NAR, I think, the first small little room there. Inman in San Francisco. My background is from Diakrit, a company that I was founded back in 2001, helping agents, portals to visualize the properties. We did, they are doing still, floor plans, visualizations, and virtual tours, and so on. I sold the company twice. First, we sold it to News Corp, 2016. Quite a tough journey to be part of News Corp and be corporate for 1.5 years. The only time in my life I've been corporate. Then we bought it back in 2018, and now we sold it to a PE firm back in March this year. But I stepped out as a CEO 2020 in the summer, and started up slowly during the autumn PropTech Farm, and we opened up in January 2021. Did our first investment already in February 2021. And we've been very active since, so we accelerate PropTech companies. We have everything from marketplaces. I think we are invested in 4, 5-ish, with one company who is maybe a little bit between in marketplaces, and then the rest are SaaS models, etc. We have invested now in 12 companies, and we have done 1 exit already. And same as you, we are entrepreneurs, me and Linus and Jean-Pierre, working very close to the entrepreneurs and the founders, helping them to find a way through this crisis. Within Diakrit, I had, I don't know how many crises, 10 crises, like it's very similar to now. So I think both me and Gonzalo is very calm. We've seen this many years
times
back. So that's, yeah. So our motto is to accelerate PropTech companies. We started in Stockholm. We had very high ambition to already now be up and running in London and maybe here, but we had to slow down a little bit. But now we are looking into open up in London, Dubai, maybe here in Spain as well, to invest in more startups, because somehow investors tend to like to invest closer to themselves. So Stockholm money want to invest in Stockholm, and London money want to invest in London. I don't know why, but it seems that they don't understand what happened with Lasudi in Thailand, which we have invested in. They have no idea, and they don't understand it.
It's not tangible.
No.
Okay.
So that's my background. Sorry.
Okay, so a lot of experience on the stage. Let's start with the most obvious thing. We're in a highly unstable environment. We have everything from inflation, potential recession. You've got tech stocks down in 30, 40, 50, even more. I can't remember which company was down, like 90% in value, they mentioned yesterday. You've got the UK government shooting itself in the foot, and so on, right? It's an incredibly disruptive time. Let's look at it through two lenses. One is if you're a company looking to raise money, what does that mean? And then the second lens I'll ask you about later on is if you're looking to buy, what does it mean? The other side of the coin. So you're a company looking to raise money, what does it mean? Or trying to sell a business? Because I know you're in the middle of a transaction at the moment.
Yes.
What does it mean given this current market?
Troubles. It's really complicated because the point is that we are starting everything. You know, everything that you just mentioned is what from this summer on. Just to give you some quick view on, for example, money cost. You know, we were dealing with some bank debt to finance companies in June in a fixed rate. We have offers in 1.2, 1.5 for the next 15 years. Today, this morning, I received this same bank giving me a new rate on a fixed rate on a 5%.
Right, so you were borrowing money 4 months ago
Yeah,
at 1.5% fixed rate for what, 10 years or?
yeah, 15 years.
15 years. This, I assume it's for
For a
probably-
specific company.
Yeah, for investments, and now they've come back triple the rate.
Yep.
So how does that impact your decision making?
Well, that's the point, you know. So things are in such an early stage and an unknown scenario that it's really hard to take decisions. So a lot of the investment economy is putting everything on hold. Okay, so it's really hard to take decisions right now because you don't know what's coming, and the size of that wave is unknown yet. So there are a lot of people that are willing to invest, but you know, from the investment committees and the situation is, okay, you know, you do your research and do your investigations and do your questions, but before you take the decision, it's going to be easygoing for what's coming in the next 2 months or so. So I think for those who are trying to raise money, really a lot of patience, a lot of focus on what they do, and what I'm telling to every single company, especially the startups, is try to keep your savings, try to keep your money really, really close to you. Because if you are expecting to raise money in 4 months, 3 months, it can take you up to 8 or 10. And you know, that is going to depend on how you finance the company. You know? Okay. So it's a hold-on momentum.
Okay. How are you seeing the markets?
Very similar to Gonzalo on this, that you need time. I think we spoke yesterday a little bit. We also raising funds to us. Now you need 10, 15 meetings to even get one investor in. A year ago, 1 week, we filled the tranche. Literally in 1 week, we filled the target and it was full. So yeah, it's like if we were here a year ago, it's totally different. And I think that's the same for the startups who even have met me already, some of them. We are much, as Gonzalo was saying, much slower on the decisions. We want to meet much more times now, and we really have to know the entrepreneurs because the challenging time is not over. But if you see from a positive side, if you flip this around, back in 2008, 2009, all the companies that came out of this. So now, for us as investors, it's quite interesting also because now we should try and find the real apples that are going to become really big companies, because you had WhatsApp coming out of 2009, Spotify releasing their products in 2008, you have Slack coming out. You know, we have so many companies coming out of a crisis because the coming years, if it's 1 year from now or 2 years from now, it's going to be good markets. So it's just to find the guys who... So patience and time, I think, is the challenge. And because if you don't have money, you don't have time. So that's, of course, it's a big challenge.
Yeah. So what are the characteristics of companies you're looking at the moment? And if you're looking... So that one thing is to tell existing companies who want money, you know, shave your costs, just keep, you know, if you've got revenues coming in, make sure you're collecting the money, manage your account, understand that. But as investors, you're still seeing these opportunities. So, but what are you looking for? What's sort of starting to step out of the horizon as something that's worth investing in? What are the characteristics?
Okay, I think when you go to look at the market in an opportunistic view, what you find is some companies that are maybe on Series A or Series B, which means that they are already trying to raise funds for growth. So it's not like the very beginning on the startup process. It's more mature company with a good time to market product, and probably thinking about spending in marketing, acquiring users, but the product is stable and you can really taste it and do a strong due diligence on that. So we try to find down rounds on those companies because they know the market has cracked in some way on valuations, and the ones that are managing good this type of companies, they understand that they have to put the valuation down as well. So you can find companies at valuations, previous valuation of 150 million that now are doing rounds in 60, but with a product already with revenues, some of them good EBITDA, and they just need the money to expand, to grow. So that type of opportunities are the ones that are really interesting for us.
Okay. What about from your side?
Yeah, we are in our structure. We are looking in an early stage than the A rounds and B rounds, and we are there for companies that have a product, have real clients, and are going to take the steps towards the A rounds. A year ago, we would invest maybe and did invest in companies that have a little bit longer horizon, that's going to make money in 3-4 years. Now we need to see the monetization faster and maybe within a year or so, because otherwise, we don't know what's going to happen in a year, so they need more cash. And we have also, when we were talking in Miami, we had an average of 15% holding in our portfolio companies. Now we are close to 20%. We have helped the companies, they need to go down a little bit in the valuation and so on.
Are you concerned with your investments that you might be stuck and not be able to exit any of them?
No.
For sure.
No.
No, and for sure. I'm not sure which is.
I think the difference is we have not come to the A. You see all the crashes or in valuation and so on. Klarna in Sweden, 70% of the valuation down on a CD or whatever around they are at. There you have a lot of risk. On the higher you go now, the value, and you maybe went in on A, now they're down to seed level valuation again. So that's of course, but we are working very close with our companies. So from our perspective.
Are you worried at all that your companies that you invest in and work with are going to run out of cash?
Yes, and I'm challenging the entrepreneurs. That's the most important, because this is the time where you have to be creative, flexible, change maybe the strategy, moving to that market instead, stop that market, etc. I'm most worried about the people actually. They're crashing because we are 3 guys working full time and we have 11 companies. And if the founders are going into the wall because stressed out with family, food on the table, they have to go down in salaries, they have to wait for the money. That's my biggest concern.
And I guess the challenge is when you increase your stakes from 15 average to 20%.
And then we get more responsibility.
Yeah, more responsibility, becoming more founder-like.
Yeah.
And how often do they come to Dad and say, "Hey, I need money"?
Yeah, that's true.
And then how do you handle that moment, right? How do you handle the moment when the entrepreneur, because you can't control 11,
no.
right? It's like having 11 kids, and some are playing up, some are following the game, some are not quite good enough, or some the game's changed for them, right? Their markets have changed, so their business plans have sort of crashed a little bit. How do you? I understand how you're talking, but when they come and ask for money, but you're a 20% shareholder, do you try to get the other 80% to contribute? Or how do you manage that dynamic?
Yeah, we do a lot of co-investments. So yes, we have other VCs or other investors in the network. So we're trying to help. And as I'm coming from the entrepreneur side, it's very important that the entrepreneurs doesn't get diluted, in a bigger way than possible. This is So we're looking to try to find debt financing now, but it's, Gonzalo said, it's very expensive. You know, it's a middle ways now. But we work very differently with the companies. So we are very active in 7 companies, and then we have other co-investors as well helping us to, yeah.
So Gonzalo, I want to follow your comment before when I asked the question before about you're worried about the company's going busy. He goes, absolutely no, and you go, absolutely.
Yeah.
So how do you view that?
Oh, it's just because the exit process is the most complicated part in an investment. You know, putting money in is always, well, it's always easier because you do your due diligence, you set up your contracts, you fix your price and take the stake or whatever. But when this is not a liquid asset, whenever you want to do an exit, you really have to put a lot of dots in the same line, and there is a lot of different interest. And if you are a co-investor and you have more shareholders, then you have to talk with more people, you know. And of course, there is the management team, which is always in a good part. They want to continue and keep on rolling the company, but you may want to step away and coordinate all that. It's really difficult. So yeah, I think it's almost for sure that you're going to be trapped in some of the companies not finding the way of doing the exit. Of course, there is always, you know, some clues on pricing. You know, you keep on going down, but if you think about staying in a company for 10 years and then put the price down to go out, then so for me, I think one of the knowledge or the teaching that I got from the market is you have to take the windows of exit that you find. If you keep on thinking about growing the company, you may get trapped, and then to go down, you have to deprice your shares. So through the life of the company, there are maybe 2-3 specific momentums of getting a good exit, and it's really important to step on that.
I'm actually reflecting on what you just said then. It's like I got a bunch of investments, I know 20 or 30 of them, and what's interesting is they're all at different stages of life, and some we co-invest in and so on. And I agree with you, you take the money when it comes. So I had someone the other day saying, oh, we've got an investor coming in, they wanted X amount of the company, we couldn't give that, we've got a secondary. I said, yeah, I'll take it. Yeah. Right? Yeah. And I'll do 3 times the money, 4 times. I may not do the 10 times, but I know the money's now in my bank account, not in the future Hope account.
Yeah, and I think it's really important, Simon, to when you do that math, to think about the whole portfolio. So if you are investing 30 million fund into whatever 15 companies, thinking about what you want to extract out of the complete portfolio. Because if you go company by company, things get really complicated, you know, because you're going to get 3 times here, but nothing there, and maybe you equal here. You have to take the picture of, I'm going to do 3 times money. So I put it 30, I take out 90, and I do this in 10 years, and, you know, try to keep the average line going up, you know. Yes. Yeah. And you do 10 times, and then you do nothing, and then you do 1 time, and that's why sometimes, you know, taking that step out with less money than it costs may be good, because the average keeps there, you know. Zero is the one that hurts.
Yes. Yeah. Yeah, no, and we did that the other day with one of the investments we took out. I think got 60 cents in the dollar or something, right? But I'd rather have the 60 cents out, because if you looked long term for the company, you came to the conclusion that zero was a greater than a 0 probability was 0. Yeah. Right? And if you project forward and saying, well, the other thought was, if I take the 60 cents in the dollar, a lot of the other opportunities that are further along are actually cheaper. Yeah. And I'll take my 60 cents and put into something that's 3 or 4 years further, greater probability of being valuable in a longer time. So there's a bit of realigning of portfolios from earlier stage to mid stage at the same price. Right?
That's right.
Because the valuations have come down, so you're getting far more assurity for the money that you've got in the process. So on that doom and gloom note, on the brighter side, where do you see the good opportunities to buy now? Are there any good opportunities to buy now?
There is a lot of opportunity. I think you had some pre-question to us. Do you getting leads? Is there many companies coming to? We have the biggest inbox ever right now from PropTech companies. We are focusing on the Nordics and Southeast Asia, but I think we're having daily inbounds of investment leads, potential investments, etc. So, yeah, where is the biggest opportunity? I think for us now is mostly in the existing portfolio. That's where we see that's really is our biggest important thing, because we have these 11 companies. So I can still sit here in 1 year and say yes on the question. I'm not worried. So because we need to, these 11 companies need to grow. So that's probably is my answer, that in our existing portfolio, continue invest, and we are looking to in 2-3 more cases, but that's
yeah. But it's interesting, right? Because you've got this capacity now to reinvest into existing businesses at a lower price,
Yeah.
and you've got far more knowledge and comfort.
But on the other hand, as I said before, out of a crisis, it will come a very quick upturn. Will it be this year, next year, in 2 years? We don't know. So that's why we are really preparing for new markets, Dubai, London, here in Spain. I see very interesting companies here. Some of them are going to pitch soon. I think they will be really interesting. So that's why we are in a good timing. We have a 5 to 6 year left on our structure one. And I wish that in 4 to 5, 6 years, we have a good opportunity to do exit.
And how do you manage your inbox?
No, the market is full of opportunities. Is right. I agree. Maybe, you know, when the risk is big, the opportunity gets bigger. You know, at the end, you can negotiate better prices. You can negotiate better conditions. Of course, being a fund and defending always the capital, you can ask for some preference stock, some preference liquidants, some X point whatever, 1.5, 2 times your money. So yeah, you get stronger if you have the money. You know, at the end, cash is king, especially in risky business, and the opportunity is there, although the risk gets higher and higher. So my recommendation would be, you know, focus on what you understand, focus on what you know about the business, and especially how can we help the business to grow, because I think that's crucial.
Okay. The last observation I'd love your thoughts on is that as you mature, and you've been investing in companies for 20 years, right? Longer, and the same. And how do you go from small tickets in a larger number of players to larger tickets in a smaller number of players? How do you think about that transition?
I think it's a characteristic on the fund itself. So whenever you're running an investment fund, you have to define what you're going to do. And there is kind of your way to go in a paper. And they say, listen, I will focus in this type of industries, I will focus in this type of markets and company size and ticket size, and, you know, a profile of a talented entrepreneur that I'm going to try to coach and grow from whatever I invest. So I think it's really important for those people who is looking for money, before going on and talking to any fund, trying to understand what are the characteristics of that fund in terms of what it's looking for. Because what we did is we ran a fund for seed capital, which have nothing to do with the one that is going for growth. So that's independent. So I think it's...
Now, so from our perspective, as soon as the market is up a little bit as well for us to get in more funds into the funds, we have a goal to open up more PropTech farms in more cities and more markets where there is PropTech companies coming up. And then on top of it is the goal to put a larger growth fund. So we will both work from both the seed level and a bigger investment, and help the good cherry to grow into a growth fund. So that's the long-term goal. But it's been 8 months of little. We were very fast the first year, but then it's been a little bit slower this year to develop the whole business idea. So we are, in one way, in the same position as other startups, because we are a startup VC.
So let's have one last question here, and this is about pre-Series A, which is probably equivalent to the next 7 people are going to come up here and present 6 minutes each, right? Which, you know, I like Pitch Club. It's a great opportunity to present businesses and really ask to raise money. It's a hard time to be doing it. What would you be looking for in these early stage Series A type businesses? What would pique your interest to at least look further?
Well, I think a co-investment will be interesting, not being alone on taking that. Also, understanding the company cash need or cash flow needs for the next 3 years. So if he's going to run out of money in the next 6 months, for me will be, not really good, because things are going to change, and you want to make sure that whatever you do now is going to give you, enough track to pass the risk or the macro, at least for we are telling all our companies to at least have cash flow for the next 2 years in the bank. So
2 years in the bank, enough cash for a reasonable growth business plan. I assume at the same time you're telling them to ease up a bit on the business plan, be a bit more conservative, okay, and in how to grow.
Yeah, something that helps is just, whatever they're going to do link it to expenses, okay, you take it for 2 months and think it again.
Okay.
Yeah, but from a pitch perspective now, maybe I hear your question as well. I think be on the point, be on the what do you need the money for, what is it, what problem are you solving, and be on to get my attention even.
Yes.
If you're 6 companies now sitting, you can see many people sitting with a computer and phone, even listen to us. To really look up and listen, be on point, and then have a strategy. And it's easy to say that you should take in more money that you maybe need now, because it's tougher to get in the money you need now. But I agree on that point. But I think now is the time as an entrepreneur. I've been to this exact situation back in 2001 when I started Diacrit, another crisis, 2000 crisis. You have to knock on every friends and family as an entrepreneur, because also then you have actually got a base of money. You can show investor that I collected 2 million from friends and family. Now I want another 2, so you can 2 million, 200,000. The Swedish krona is like, it's very low money. But so you always, so I think that's important to. And you need to really be an entrepreneur now, for real. A year ago, we invested in companies. We are lucky. We are happy with many of them, but it was very quick decisions.
Yep. As I say, always be pitching your business. Never stop. Never stop. Gentlemen, thank you very much. Always great to hear your views on the market, even though it's a bit doom and gloom. It does create opportunity.
Yeah, it is.
And I think as they've pointed out, that out of this moment of a little bit of chaos and a little bit of uncertainty, there are going to be some really interesting companies.
Yeah.
And if you can't be that company, invest in that company.
Yeah.
And that's only going to happen if you've got some cash in the bank and you're looking at all the opportunities out there. So thank you very much.
Thank you.
Thank you very
Fantastic stuff, Gonzalo.
Thanks.
Frederick, thank you.
Thank you.
We'll see you at drinks.
See you later.
Excellent. Okay, now comes the fun bit.